What is driving the market volatility, and how can you profit from it?
Exactly. We've gathered insights from experts like John Smith, who specializes in trade management, and Jeff Snider, an authority on consumer market trends.
In this video, we've harnessed artificial intelligence to distill their knowledge into quick, actionable insights, saving you valuable time.
Prepare for powerful predictions, including how the upcoming bear market could reshape buying strategies, as highlighted by analysts like Tom Lee.
So buckle up. John Smith will begin by explaining when to enter and exit your trades, which is crucial for maximizing your profits.
And be sure to stay tuned. Jeff Snider will tackle pressing issues in today's car market, while Tom Lee shares insights on the S&P 500. Don't miss it.
Today, we delve into insights from John Smith regarding effective trade management.
John highlights the critical importance of timing your trades when entering and exiting.
John Smith posits that mastering trade timing can significantly enhance financial outcomes.
He stresses that aligning trades with current market conditions is essential for minimizing risk. John emphasizes that recognizing market trends empowers traders to make well-informed decisions.
He also underscores the necessity of consistently monitoring the market to maintain an advantage. John Smith elaborates on the essential role of risk management in trading.
He recommends using stop-loss orders to protect investments during significant market fluctuations. John emphasizes the necessity for discipline in trading to avoid emotional decisions.
He believes that adhering to a well-defined strategy leads to improved trading results over time. John forecasts that market volatility will be a recurring theme in the next quarter.
He also notes that innovations in trading technologies could potentially alter trader strategies.
In summary, John Smith stresses the importance of timing trades to successfully navigate market volatility.
He advocates for sound risk management practices and underscores the necessity of discipline for achieving sustained trading success.
Today, we are analyzing the increasing price of silver and its potential economic implications.
Analysts underscore the impact of potential bank failures amidst global market uncertainty.
Experts caution that the recent rise in silver prices signals escalating economic fears.
They warn that such trends may lead to significant banking crises, increasing the likelihood of an economic downturn. Analysts reveal that the recent surge in silver prices mirrors anxiety over inflation.
They argue that more investors are viewing silver as a reliable asset during unstable times. Economic analysts believe potential bank failures could trigger an extensive economic crisis.
They stress that immediate measures are vital to mitigate these risks. The discussion highlights investment strategies that focus on tangible assets.
These insights aim to help viewers protect their investments against market risks. Market analysts predict a recession could occur if bank failures take place.
They emphasize the need for swift responses from financial institutions to avert economic fallout.
In summary, navigating the current economic landscape calls for strategic financial decisions.
Experts suggest diversifying assets and remaining alert to market shifts.
Today, we analyze Florida's real estate market and the potential collapse it faces.
This analysis points to several economic trends indicating a downturn driven by rising interest rates.
Rising mortgage rates create more pressure on home buyers.
Many households may consider withdrawing from the market due to high prices. According to Reventure Consulting, increasing interest rates lower affordability.
This could lead to many buyers either scaling back or exiting the market. Reventure identifies that Florida's housing market is currently overvalued.
They anticipate that a correction is likely in the near future.
What does Reventure Consulting foresee for the Florida housing market?
They predict a significant decrease in housing prices ranging from 10 to 20% within the coming year.
Reventure advises potential homebuyers to hold off on making purchases.
They also highlight that future corrections could create better opportunities.
Today, we explore insights from Jeff Snider at Eurodollar University regarding the significant financial challenges faced by consumers, particularly in the automobile sector.
Jeff points out how many consumers are feeling the financial strain as vehicle prices rise, making it increasingly challenging to make purchases.
Jeff Snider emphasizes that soaring vehicle prices are disconnected from what consumers can afford, leading to the ongoing crisis in the automobile sector.
He notes that escalating living costs make it hard for consumers to cover basic financial needs, let alone buy a new car. Jeff discusses how the decline in consumer credit is hindering many from financing car purchases.
As consumer debt increases, a significant drop in financial flexibility is affecting the auto market. Jeff highlights that the current pricing of vehicles is unsustainable in the long term due to prevailing economic instability.
While there may have been spikes in demand, it struggles to align with consumer income realities.
What predictions does Jeff make regarding consumer spending?
Jeff anticipates that unless there are significant improvements in consumer finances, spending will likely decrease further, adversely impacting economic growth.
Jeff concludes that individuals must closely monitor economic indicators and their personal financial situations.
He advises staying informed about market conditions that could further influence purchasing power and consumer behavior.
Today, we review predictions regarding the potential onset of a bear market in 2026.
It's essential for investors to monitor critical economic indicators closely.
Forecasts indicate increasing market volatility, particularly concerning the prospects of a bear market in 2026.
While some market resilience may be observed, underlying economic issues are raising alarms. Rising interest rates are a major factor influencing market conditions.
How do inflationary concerns factor into this?
Sustained inflationary pressures could contribute to economic instability.
What insights are shared regarding consumer confidence?
A decline in consumer confidence may lead to reduced spending and market downturns.
Are there global factors affecting the US market?
Global economic conditions and trade policies are crucial in assessing market stability.
What predictions exist regarding the severity of market pullbacks?
Forecasts suggest a potential pullback of 15 to 25%.
Recommendations to adapt to market changes include diversifying portfolios.
Investors should consider sectors that have proven stable during downturns.
Which specific sectors should be the focus?
Healthcare and consumer staples often demonstrate resilience during volatility.
Today, we discuss Tom Lee's analysis on the potential recovery of the S&P 500 based on his recent segment on Trade Brigade.
Tom emphasizes the importance of investor sentiment in shaping market trends moving forward.
Tom Lee suggests that improving investor sentiment could signal a strong rebound for the S&P 500.
He also notes that important technical indicators are hinting at a bullish reversal in the current market cycle.
How does Tom Lee describe the current state of investor sentiment?
Tom reports a notable increase in investor confidence, suggesting that the worst may be over. Tom emphasizes that several bullish technical indicators have recently emerged, indicating possible upward momentum.
He also mentions rising trading volumes as positive signs for future market prospects. What forecasts does Tom Lee have for the S&P 500 in the near future?
Tom predicts a significant rally in the S&P 500 if the trend of improving sentiment continues.
How should investors prepare for potential market volatility?
According to Tom, careful market positioning and awareness will be essential for navigating ongoing volatility.
In conclusion, Tom Lee advises investors to stay alert to changes in sentiment that could impact the market.
He emphasizes that careful attention to technical indicators will be crucial for timely investment decisions.
What an insightful discussion we had with such a diverse group of experts today.
Absolutely. Tom Lee, Adam Taggart, and Jeff Snider each brought their perspectives on navigating this turbulent market.
And it's fascinating. They all agree that the current economic landscape is uncertain and requires close monitoring.
Right. But the disagreements were just as intriguing. For instance, Tom Lee stresses investor sentiment, while Adam Taggart is more focused on those economic indicators.
I found Jeff Snider's take on consumer financial strain particularly alarming. High vehicle prices really seem unsustainable.
Exactly. And it's interesting how Reventure Consulting differs on the housing market outlook.
There's definitely a lot to unpack, and I think our viewers have gained some valuable insights today.
If you loved these insights, remember to like and subscribe. Your support keeps our analyses coming.
And don't miss out on our next video. We'll delve deeper into those market dynamics and what they could mean for your investments.
Thanks for joining us, everyone. Until next time.